Welcome to the industrial heartland of New York City. This is a neighborhood that has been absolutely built up, and it continues to be built up by some of the hardest labor in New York City. And the reason why we're here is we're going to contrast some of the things that you see here with the dilettante and dandy commentary that we get from the likes of Schiff and Jordan B. Peterson. Recently, the two of them had a podcast, I believe, in the last week or two, and they were essentially discussing not only the state of the economy as it is right now, as it exists, but just kind of like more abstract notions of financial health, what a good economy might look like. I mean, there were so many errors in the statements they were making, and so many omissions, so many things that really just need to be part of any discussion when you talk about things like the economy that you rarely do hear about. Now, Peter Schiff is somebody who, I mean, it's just a total crime that he's anywhere near a television, on television programs. Now it's YouTube programs. This is a guy that has been wrong his entire life in pretty much anything that he comments about. There was one exception where he sort of, I guess, predicted the housing crisis, although the terms in which he used to predict that, I think, are a little bit finicky. But regardless, even if we give him that win, pretty much everything that he said since that point was always just totally off the wall, right? He was constantly talking about the destruction of the dollar, right? If you betted with him in that direction, you lost out. During the March 2009 rally that marked the end of the Great Recession bear market, right? He was constantly beating the drum. This is a bear market rally, blah, 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 right? If you believed him at that point, you would have lost out on some of the most substantial market gains that the United States has ever seen on a, I guess, relative basis. He's also somebody that has a lot of negative commentary on Bitcoin, right? It's not really out of principle. It's primarily because he is a big believer in gold. And by being a big believer in gold, he has a big bag of gold. It hasn't been doing that well for about maybe a decade or so, a little bit over a decade. It's only in the last couple of years that it had a rally. So given the fact that so many people believe that Bitcoin is a replacement for gold, it's a kind of digitized gold, he hates it. So this is not somebody that is an impartial critic of the economy. This is not somebody that you could really trust for anything other than saying things to hopefully enrich himself. But Jordan Peterson, right, being another fraudster, he decides to bring him on his podcast. And as they're talking, one thing that I'm noticing right away is just a total dearth of common sense. So one of the things that they kept repeating over and over again is they were extremely skeptical of spending, and Peter Schiff especially is skeptical of any kind of spending that is not, I guess, pegged to something like the value of gold, right? In the sense that we should not have some sort of automatically expansionary economy. He had this one idea, right? And I mean, just think of how ridiculous it sounds. If the government wishes to build a bridge, which to him is an example of a proper spending, right? There's this like category of proper, improper. To him, something improper would be welfare spending, but he's okay with building bridges. But even in the case of building a bridge, he says the only reason we should be able to build a bridge, or rather the only means by which we do that, is maybe the government could sell government bonds for the sake of building a bridge. And you really just have to like think about how insane that is. Any single time that you want to do anything either small or substantial, right, you cannot take on debt of any sort, right? This is considered toxic, right? They're pointing to things like, we used to be on the gold standard, and during the gold standard, things used to be better. Well, I don't know how better they used to be, right? It seems highly selective to say that a century ago or shortly before World War II, things were better. The second point, of course, is there's very obvious reasons why the gold standard, to the extent that it even exists, gets suspended all the time, right? We suspended it during World War II because we understand that no matter what our ideology might be in this regard, when shit gets real, you absolutely have to start spending, right? During a war, you have to start spending. You can't not spend in a time of war. If you don't spend in a time of war, you're likely going to lose that war. But I think most amazingly, as they're discussing the economy in these like totally abstract, divorced from reality terms, there's no indication at all that the resources of the economy that they're willing to sort of either preserve or take seriously. So a very obvious resource, I would say, is the workers. If workers are routinely hurt or sick or not protected, or they feel that wages are insufficient, or they have other problems with employment, if they can't get proper health care, all of these things are going to ultimately suppress your worker force, right? You're going to have, if you pile up disabilities, if you pile up sickness, if you pile up a total lack of motivation to work because you're not able to actually get the things that you want to get, right, by virtue of working, you're not going to have a healthy workforce. So the fact that they could discuss, this is literally an hour and 40 minutes long, this podcast, they're discussing the economy, and the basic issue of workers and work is not addressed even once. You have to be able to kind of like make do with what you have, right? That's an interesting thing, right? They're coming at this from the perspective of, you know, a conservative orientation, and yet throughout this conservative orientation, not once, right, are they in a true kind of preservation mode. The true resources that are finite, right, to them something like debt is finite. I'm not sure how finite it is, because historically that seems to be false, right? Debt is certainly money in many important respects. But when it comes to true finite resources, they're not treating them sparingly, nor are they treating them with any kind of real respect that is becoming of any like actual like non-pathological conservative orientation. Another issue that kept coming up is inflation and Peter Schiff's unhappiness with how inflation gets defined. So Peter Schiff's objection to inflation is along the lines of, well, look, inflation used to be defined purely in terms of the extent of monetary expansion, right? To what extent has money increased, right? The supply of money, and that would basically be your marker for inflation. And he's complaining that right now inflation gets defined by things like CPI, right? Basically, how people in their day-to-day lives, how they feel in terms of consumer prices, right? What they have to pay in rent, what they have to pay in for food, right? What they have to pay for other kinds of services. Not once did they, you know, at all try to even deal with, well, why would somebody define inflation through CPI as opposed to just pure monetary expansion? Because if you do like even like the most basic research on, okay, what was the monetary expansion that was going on in 2009, 2010? Because during those years, fascinatingly, monetary expansion was substantial, and yet inflation kept being under the Fed target rate. The way that we all felt in terms of what we were buying, inflation wasn't, you know, necessarily a problem despite this monetary expansion. And this is a principle that plays out again and again, right? It's not simply a matter of let us expand the money supply and therefore prices will go up, right? That money supply does not necessarily make it into all these little niches in the way that's predictable or expected. More recently, we had an inflation spike, and it just so happened that it came on the heels of both of a short-term economic contraction. There was also obviously monetary expansion, but there were also supply chain issues, and there were so many things happening all at once. And it's really all these factors all at once that necessitated something like inflation. There's also like the feedback loop of, you know, it's not even clear to what extent, as prices are going up, as inflation is in the news, it's not clear to what extent companies are simply now, using essentially their monopoly power to set prices. The problem with not only this discussion of inflation, but also what Peter Schiff also likes to talk about is, and this is very common among right wingers, they're always beating the drum about hyperinflation. And hyperinflation simply, right? They put out a statistic. I think it was Jordan Peterson that said this. He said something like 1%. You have like a 1% chance if you live in a developed country to experience hyperinflation in your lifetime. And of course, this is based on very limited data. This is based on a new kind of monetary regime that has not, the way that we've embraced, for instance, this idea of debt as money, that is fairly new and it is fairly interesting. We don't have that many great examples of developed countries with hyperinflation under those circumstances. It's also very different to live in a country like the United States versus literally everybody else. I know like the MMT crowd says that MMT more or less works with anybody that prints their own currency, right? And is kind of like a sovereign issue of debt or whatever. I guess there is some reality to this claim, but it really does seem to me like being in a country like the United States where you have essentially infinite credit, it's very useful for not only any kind of spending that you want to do, it's also very useful in terms of not experiencing huge amounts of inflation. There's also something incredibly self-serving, not only about their definitions, but just like the general comments on the economy. And I first started pointing this out about a year ago, maybe a little bit more than a year ago now, once the Fed rate hikes started. And Elon Musk, because he was so sensitive and emotional about his Tesla stock price dumping, due to not only his purchase of Twitter, but also just the rate hikes and sort of like a froth coming out of the markets, he started saying things like, the economy is about to be in ruins. What are they doing? They need to stop. Well, he didn't. I don't think he ever explicitly said they need to stop hiking rates, but that's kind of like the idea. By implication, that's what he wanted, because again, he wanted the bubble to reinflate. He wanted his overvalued company to continue to stay overvalued. And it was extremely self-serving. And at the time I was saying, look, rate hikes work in a very kind of counterintuitive way, right? I mean, if rate hikes are being used as a means of essentially controlling inflation, I've never truly understood that reasoning. I mean, theoretically, I guess I could sort of understand it, but the problem with that mentality is rate hikes will also, at a kind of baseline level, just increase the price line, right? Increase the general price level. I mean, the rate hikes are going to be something that is passed off to the consumer. Now, you see this in subtle, not so subtle ways. Perhaps the not so subtle way right now is you have rate hikes that affect stuff like mortgage lending, right? A lot of people who maybe were able to buy houses even with inflated housing prices, let's say in 2020 or 2021, it's just more difficult to do that now because you'll be paying a much higher mortgage, right? Because when you get a mortgage, what happens is, in most cases, the interest payment is actually front loaded. So you're not paying off the principal first. You're paying off this front loaded interest that gets expanded, let's say, over the course of 30 years or whatever the terms of your mortgage are. But rate hikes in general, they don't necessarily slow the economy down. They might slow down some parts of the economy, but if you look at credit lending, right, that had been expanding all throughout the rate hikes. Credit is expanding, business is growing, right? GDP is growing. Oh, look at that big truck. That's a big ass dump truck. Now, the reason why rate hikes often can accelerate the economy is these are interest payments. You could view a rate hike as something that is putting money in the pockets of people in very regressive fashion. So you could view rate hikes as a regressive form of stimulus. The people that need the money the most, right, they're not necessarily the ones getting it, but still money's flowing into the economy, right? It's still a kind of stimulus spending. Makes me wish I had done a video about all this like before the midterms, because I was talking to Jill Parrish, who you guys have seen in this channel before, right before the midterms, and I said, look, I understand that inflation is worse than it has been in decades, but there really isn't any indication from the broader economy. People are doing more horribly than they were, let's say, several years ago, right? In some ways, this may be true, but in other ways, it's not really going to be felt as easily as the media makes it seem. So I was not expecting a red wave, and we didn't get a red wave. And I mean, essentially, it's like here we have a guy who is supposed to be this like big bad economic rebel. And what I just provided to you, right, this is information that is not, right, it's not typically thought of in the way that I just described. It wouldn't be to rehash the same talking points, and it wouldn't be in this kind of generic fashion. If you look at, the kind of like clickbaity thumbnail photo for this conversation as well as a title, it's like, these like storm clouds are gathering, right, for the American economy. And it's like, eventually this guy's going to be right again on something. But in the meantime, one of the most profitable trading strategies you could have done, right, in the markets over the last 10, 15 years is to completely do the opposite of what this guy has said. Again, whether it's the dollar index, whether it's investing or not investing in Bitcoin, whether it's like whatever, right? Whether it's just being just like in the generic stock market, right, without doing anything fancy, just sitting literally in index funds. So I am very suspicious of all these people that have extremely self-serving takes on the economy, right? And it starts to kind of like really blur the line between a market analyst versus this. And I only noticed this really like starting from coronavirus, right? Because of all the stimulus spending and all this other stuff, we suddenly had all these new market participants, right? People that maybe were like out of work and they were sort of like paying attention to the media, and it just so happened that the media started to explode with all this competing information about the economy. It started to explode with all this material about how to trade, right? It started to explode with all these talking heads. So now this guy that is supposed to essentially be a market analyst, he can't really and easily be an analyst any longer, versus someone that is like, pushing his own ideology, both like in terms of his funds, but also just kind of like where the money is in that regard. Because one thing about public market commentary is, for whatever reason, and this has been going on for a long time, but maybe it's like accelerated both in 2020 as well as more recently with the rate hikes, bearish news or people that have bearish predictions and all this other stuff, that tends to do a lot better. One thing that is true about their critique is, and they don't say this explicitly, but I'm going to say it this way. One thing that is true is the fact that we have so many people who are just terminally sidelined from the markets, right, from any kind of like wider participation. So you could sort of expect psychologically maybe why so many people are, at least like in the public face to all this, why psychologically they're interested in this idea of like, I want this huge meltdown so I could at least buy a very steep discount. Of course, when the discount comes, nobody ever buys, right? Because I mean, like, okay, so Peter Schiff is talking about a steep discount in 2006, 2007, 2008. 2009 comes around, he's still talking about a steep discount. It's going to get steeper. It's going to get steeper. No. Don't buy now, right? Literally, don't buy the bottom of the market. It's going to get worse. It's going to get worse. And if you look back historically, just like if you could find links to commentary at the time, it really is amazing how everybody was more or less saying the same thing. Like the consensus position was everything is going to totally go to shit. Everything is totally unsustainable. And when they're wrong, it doesn't matter, right? Like it's just like whether it's like presidents or whether it's anybody that has these like very high positions in power, it doesn't matter how wrong you are. In fact, the more wrong that you are, it's kind of like, well, you're just joining the ranks of everybody else, and we need a place for them in the economy. We need a place for them in the media ecosystem, and because we need a place for them, we're going to make a place for you as well. One thing that the framing that Peter Schiff used for inflation, I think, is correct. He said inflation is just another tax. I think this is 100% accurate. Just like with any kind of tax regime, you're actually supposed to get something for the tax money, right? You don't give, like the social contract with government is not one of, I'm going to give money for the hell of it, right? Because I love my country. You're giving money to get something back, right? If you love your country, that love is supposed to provide something for you, right? You show your respect and it shows its respect. But more recently, right, over the last few decades, and he would say it's because we went up the gold standard, right? But there's so many complex, interesting, nuanced reasons for changes in the economy in the last few decades that have absolutely nothing to do with getting off the gold standard, right? That's another point, like absolutely no discussion of just kind of like wider macro forces, except this like monomania, right? When it comes to monetary theory or whatever else, right? It's all monetary theory. But inflation, just like with any other tax, is supposed to provide something for you. That thing that it provides is a slowly expanding, increasing standard of living. If you're not getting that expansion in the standard of living, you're essentially paying a tax for which you're not really getting much of anything in return, right? It's totally wasted money. And that really is the problem in the last few decades. It's the fact that it's not hyperinflation, right? It's not like if you look, for instance, at a video that I did sometime last summer when I was talking about a novel I've been working on, Tinker Toys, and I pull up the gold chart, I pull up the dollar chart, and I essentially say, nothing about gold right now looks like it's going to go into some sort of like hyper phase of like a super crazy breakout, right? Because all you really need for this slow accumulation in the price of gold, and I do believe the price of gold will increase over time, a slightly elevated inflation rate. Even if you don't have a slightly elevated inflation rate, even if it stays at 2%, eventually it seems like historically gold does catch up to the inflation rate. But if we're now in a state of like 3% inflation, 4% inflation, and this is more or less what we could expect. So again, we're getting the inflation, we're not exactly getting improvements in the standard of living. So inflation is slowly taking away purchasing power, and that is not supposed to be how inflation works, right? Inflation is supposed to, over time, increase your standard of living. So even if your dollar is technically worth less, it's not something that you necessarily miss, right? Because you're getting more for it in exchange, right? Because one of the fascinating things about government is the government could theoretically spend a lot less. And this is true of like organizations at large, but government specifically because it doesn't have the same profit motive, right? By lacking a general profit motive in the way that businesses have a mandate to create profits, you're able to essentially send what would be profits into, your consumer base, which would be, your voting citizens. So that's been out of the window. It's not so much a problem that Peter Schiff identifies this issue. It's the fact that he has no solution other than talking about a return to the gold standard. And another funny thing is, although Jordan Peterson is in this conversation and he's boosting his Bitcoin bags, Peter Schiff is trying to denigrate his Bitcoin bags and inflate his gold bags. And although they're talking about this, with two people that ostensibly maybe know something about cryptocurrency, at some point Schiff starts discussing like, well, you could theoretically use gold. You can't use a bar of gold to buy anything, but you could, tokenize. He said, tokenize gold and use fractions of that, tokenized receipt essentially to pay, for a coffee in the morning or like whatever. And they're talking about all this as if it's like purely theoretical and not what it actually is, which is like, we already have that. We have tokenized gold, right? And guess where it's tokenized? It's tokenized on the Ethereum blockchain. And it's going to be tokenized probably on other blockchains as well. This is on the one hand threatening to Peter Schiff. So to him, this tokenization is going to be, it's going to be like an abstract token. It's not going to be in a blockchain somewhere, that would increase in network value. But on the other hand, we have somebody like Jordan Peterson, who is just, a total buffoon and ignoramus when it comes to any topic whatsoever. And here he is talking about something that he's ostensibly like passionate about, which is Bitcoin. And he's not even able to properly push back on Peter Schiff's lack of understanding here, right? Because I mean, you could explain away Peter Schiff's lack of understanding, since he himself is not really involved. Although his son is. That's the fascinating part, right? That's another a bit of a resentment, right? His son is not following him into the gold market. His son is like on Twitter and shit, just like talking about cryptocurrencies. That's like a funny little inversion, and it's also funny because it's like, the arguments that he's responding to about millennials or whatever, having this preference for one set of asset versus another set of assets, right? His own child is kind of like living proof of that. And of course, that's just kind of like an anecdote, but just symbolically, right? The world's kind of a most visible booster of gold to be in this kind of scenario, I personally find kind of funny. Again, it's just incredible to see so much discussion on the economy, and yet things like, well, what are valuable economic projects? What is the actual like real limits of the real economy, right? There's a distinction to be made here between a theoretical economy and a real economy. And the fact is, I mean, just even using something very simple like infrastructure in the United States, we have room for at least, it's true that maybe some of these estimates come from people that have their own vested interests here, right? It sometimes comes from lobbying groups for construction and whatnot. All that is true, but still, we could all tell, right, compared to many other countries, and the size of our country, there is most likely, at the very least, a several $trillion deficit in terms of required infrastructure spending versus where we're getting, right? If you look at Joe Biden's plan, it's pretty much nothing, right? It's not even sufficient to, not forget about upgrading or whatever. It's not sufficient for actual maintenance of what we already have. And of course, like if Republicans come in office, they're going to slash that back even further. Democrats wrest power again from Republicans later. They're going to lowball yet again, and that's going to get slashed. And that's really the kind of hamster wheel that we're on. But we have a several $1 trillion deficit probably in infrastructure. We have many more trillions of dollars as a deficit in terms of building out green infrastructure, specifically for climate change mitigation. If you guys saw that interview that I did with the radical climate activist Arnold Schroeder of the Fight Like an Animal podcast, we tackled the 1972 book Limits to Growth. And one of the key theses of that book that's really worth thinking about was the fact that as climate change accelerates, or any kind of environmental issues accelerate, eventually the money that we're spending on human well-being, human development, that has to now get siphoned off to just keeping climate change at bay, just mitigation of like the worst, let's say, hit areas. If like California needs a ton more money to deal with wildfires, if New York City essentially needs money to like not be underwater, Philadelphia needs that money to not be underwater, if Florida can't be underwater, that's a lot of money being spent that could be spent on human development. So they keep talking about this theoretical future, right? We're borrowing from the future. Our grandchildren have to pay X, Y, and Z. I don't believe that to begin with, but what about the fact that right now, as we are living, by not spending, we are in a much, much more substantial way borrowing from the future, aren't we? Right? We are essentially saying we expect everything to be normal. Climate change isn't real. Jordan Peterson more or less believes that climate change is bullshit. I can imagine myself, right, as an old retired man, having to deal with flooding, having to deal with like, a house that I'm supposed to be living in. Now I have to canoe my way out of it and find a new place to live. I shouldn't have to be doing that, right, as a 70 or 80-year-old man. I should be enjoying my life. So in that way, if we want to talk about regressive taxes and inflation being a tax and all this stuff being taxation essentially, well, isn't that a regressive tax on me? It's a regressive tax not only on children, but it's especially perhaps a regressive tax on very old people that now suddenly, because not a lot of money, right, could be reserved for them, now they have to take it upon themselves to essentially live out some sort of like Wild West existence. That is a real crime. And again, like I said before, it is a crime that Peter Schiff, one of the worst analysts in the market, one of the worst performers in terms of funds, one of the highest expense ratios in terms of funds, one of the worst track records in anything whatsoever. It is a crime that this man is on TV and everything here that you see around you, right? Everybody here, all these trucks, all this pollution, all this stuff going on, they're out here breaking their bodies. They're out here mauling themselves, breaking their hands. Right? I did some masonry just to build a tree pit around my house. Took me a week to do it. By the time the week is over, for 6 months, it felt like I had a small tissue injury in my hands. Right? Those are the real costs. These are the people you should be thinking about. I did that shit for a week, right? And it was hard for me to use my hand for months afterwards. There are people that do this their entire lives, and they're not getting taken care of. And eventually, if what Peter Schiff wants to happen happens, if that happens, it's simply an acceleration of all of that, right? We're living with pollution. We're living with so many other silent killers. And he doesn't want to spend anything unless you could raise some bonds to pay for a fucking bridge, right? It's just total insanity, right? And the way that he phrases it, it's like a bridge, right? A bridge. You want to build a bridge in the United States of America. Just totally divorced from reality, not even thinking about anything other than like essentially A, his bags, and B, what plays best for these various crowds, right? In terms of this burgeoning media ecosystem of just trash and go back 2 years. Forget about, I said go back to 2009. Go back 2 years, just 2 years. Go back 3 years. See what people were saying in 2020. See what people were saying in early 2021. It's just all wrong, isn't it? And they are now Peterson is sort of getting his feet wet, right? Dipping his toes into this ecosystem. He's testing out the grounds a little bit with his shit Bitcoin takes. Now he's going to expand even further out into gold, right? He wants to diversify his bags. And guess what? You're going to be buying it for him. You're going to be buying it for him. And then by the end of it, having never done any kind of fucking work like this, never, ever, ever, he's going to tell you that he's been hustling his whole life. Bullshit. Isn't that beautiful? People hate this kind of stuff. I don't. I was walking around with somebody yesterday in Coney Island, and we were talking about the neighborhood, how it looks like. And one thing I brought up is, I grew up in Coney Island, and a lot of people might think it's ugly, right? It's full of stuff like this, but I love these kinds of images. I love these images. They've always been, in a weird way, beautiful to me, even though objectively speaking, I know it's not beautiful in the way that we conventionally call things beautiful. So anyway, not much else to say. Thank you guys for sticking with me this long. I should be having a video up soon, another movie macro with Keith Jackowicz. We're going to be talking about the, the 2018 film, I believe it is, Donbass, from Ukraine, Ukrainian filmmaker. He's gotten in a little trouble recently, right? We're going to talk about some of that as well. So thank you guys for watching. We'll see you soon.